Good evening, everyone. Thank you again for joining us. My name is Richard Villanueva. I am one of the vice presidents of Adjusters International. And as I have mentioned on all of our previous webinars, I am not a professional presenter, so please bear with me. My goal is to make sure that you have necessary and relevant information as it relates to your claim. I am also a licensed public adjuster by the Department of Insurance. This week, we are going to cover what we did on Tuesday, but we've had a lot of inquiries as to certain subjects, and I think we're going to touch a little bit more on those than we did last week. But this week's workshop is The Reality is Sinking In. This is a marathon, it's not a sprint, which we'll get into what is best for my family, what is best for my financial recovery, and what options are available to me. Before we get started, I'd like to just explain who we are and what we do. First and foremost, Adjusters International is local. We have been representing the local needs for going on 30 plus years. And in partnership and joint venture with our West Coast division and our Pacific Northwest division, we have been representing losses for a combination of about 75 years, totaling 50, 60,000 plus residential losses. We presented and represented thousands of wildfire losses, and we are the industry expert when it comes to wildfire loss and claims management across the country. We are licensed public adjusters. We are your advocates, and the lens through which we look is only through the lens of the advocate. We represent you and what is best for you and your interests as a whole. We do not represent insurance companies. We have never represented insurance companies, and we never will represent the insurance company. The advantage of having advocacy, whether it's through public adjusting firms or attorneys, is that you get to have high-level closed-door discussions, strategize as to how you want to move forward without exposing your position with the insurance company, and understanding how to best navigate the contractual language that you are in with your insurance company. Because make no mistake, folks, your policy is a contract. They are contractually bound to you, and you are contractually bound to them. So with that, we're just going to jump in and kind of just start a little bit with tonight's subjects, and there's quite a few. For those of you who are joining us again, I will recap how a policy looks and the different coverages so that you understand what all the different coverages mean and how to connect those dots as it relates to your particular loss. I think a good way to look at your insurance company is consider your insurance company like a casino, folks. And I hate to say it like that, but it's the reality. The house always wins. And unless you understand how to navigate your particular claim, if you don't understand how to control the narrative, if you don't understand how to strategically position yourself as it relates to the policy and how the policy should be responding to your different coverages, you're going to go down a very scripted path. And this is a path that has been designed by the insurance world for decades. It is an incredibly profitable path, and the adjusters that you are working with are, for lack of a better term, hired guns for the insurance company. They're super friendly when they talk to you. They encourage you that they're going to get you to your policy limits. But when it's all said and done, they have a very specific scripted role that they play. I am not anti-insurance company adjuster, but they are not licensed by the Department of Insurance, and they represent the insurance company. They do not represent you. So when we look at a loss or when we look at a policy, we look at it through your lens and help you navigate what is best for you. So reality is sinking in. So when we say reality is sinking in, folks, you're several weeks into this loss. A lot of you have started receiving your advances. Some of you may have been lucky enough to get up to policy limits, which we'll discuss a little bit. Your housing has probably started to settle in. You probably are now in your temporary housing, or at least in the process of moving into. You've started to get advances against your personal property. You're working on your personal property inventories. Many of you are already at the point where you've done some category inventories with your insurance companies, and that's all great. But this is exactly what every single wildfire consists of over the last 5 to 7 years. The insurance companies, folks, have an obligation to pay you money within the first 30 days. It's called the undisputed amount. And there's some misunderstandings and certainly some misconceptions when it comes to your advance payments. And people need to really understand what those mean. So I'm going to go into a little bit of detail about the reality of your advances and what those mean. So you get an advance against your personal property, and your insurance company says that they want a line item inventory or they want a category inventory. And so you are going to do your best to produce that product. And I'll put some timelines in perspective for you folks. If you were doing a line item inventory, and I'll use our firm as an example just because we do them every day, even with a team of professionals on a line item inventory, it takes some cases minimum 4 to as much as 8 to 10 months, depending on how many line items you have. If you're ripping through your personal property inventory and you're getting it done in 30 days, that's potentially a problem for you in your overall financial recovery. I can't stress enough how important it is to hit the pause button and really, really gather your thoughts, understand exactly what your actions or how your actions are going to impact your recovery, and figure out what is the most strategic path for you as it relates to your long-term financial recovery. The advances are nothing more than just feel-good payments, is what we like to call them. You've been given some money, and now you're expected to perform. And before you can perform, you still have to just justify the money that they've given you. So for those of you who have been paid up to policy limits on your structure, that's great. But how do you get past that? Where do you go? How do you do it? How do you position yourself? And we're going to discuss that. For those of you who have been given advances on your personal property, that's fantastic. But what does that mean? And what is behind that advance? We're going to go into that. In these first 5, 6, 7, 8 weeks, typically of a wildfire, there's a lot of emotions, folks. We like to say the honeymoon's over because the monies have started to flow, and all of a sudden the communication is going to start falling off because the insurance companies have met their obligation. And they're on to the next major event, and the adjusters that you've had some great conversations with are going to be far and few between, and it's going to be difficult for you to continue those conversations. And in fact, I would also say that you are probably going to start having your adjusters reassigned, because your adjusters are catastrophe adjusters, and they go from catastrophe to catastrophe. So I wouldn't expect that you would maintain a long-term relationship with the adjuster that you've already had your communication with. During these times, families feel a lot of anxiety. They feel a lot of anger. They feel incredibly lost. And, there's a lot of opportunists out there after these events take place. And unfortunately, the industry in which we operate within is specific to the event. And the only time you really even hear of a public adjuster or an advocate that represents you is when there is a major event, because there's really no other reason for us to have any communication with the family unless there's been a major loss in some form. So, we are trying to bridge the gap between the confidence that you have in your professionals, being your friends, your community, your insurance agents, and the reality of the situation that you're in. Because some of the pictures that we're hearing that are currently being painted, quite frankly, folks, I'm a very straight shooter, they're not that accurate. And it kind of sets some false sense of security. And I have been in back-to-back meetings for the last 2 days, reviewing policies, helping people understand exactly what to expect. Everybody's scenario is a little bit different because everybody's receiving different advances. And the questions that keep coming up, and the one question in particular is, and we're going to address it right now, what's best for my family? Who's on my side? Because I don't know who to believe anymore. There's an entity out there that's giving a lot of resource information, which is great. And it can be very helpful at times, but it doesn't necessarily set the realistic tone for what's ahead. And not knowing who is on your side is difficult because you don't know who to believe in these really difficult times. And so I would just say this to you folks. Your insurance agent and your broker sell you the product. They are not going to get involved in the claim, and we've established that with the previous webinars. Your insurance adjuster is going to give you just enough information to make you feel as though they're communicating with you, but they're not going into the forensic detail that you need in order to better position yourself as it relates to the language of the policy. You have a lot of community entities that are on your side, but they can't really do much for you because you're in a contract with the insurance company. And so you're trying to connect all these dots to figure out, what does my big overall recovery picture look like? So what is best for your family? Well, folks, I think that first and foremost, what's best for your family, and taking everything into consideration, all things being equal, getting settled is really critical for family's health, or just, your mental health in general. The sooner you can get settled, the sooner you can start to get back to some sense of normalcy, whatever that may be right now. And let's talk about what that means. As I mentioned in our last webinar, and I use it as an example and for nothing more, we are representing Chief Hayes for Louisville. And the insurance company was trying to, without going into specifics, with his particular claim, position him for his housing that was so unbelievably inaccurate and unfair that we finally had to get involved. And I'll just put it this way, just by having a few conversations and presenting to the insurance company what is expected, the monthly allotment that was being given has now been increased by fivefold. So if you are communicating with your insurance company, and if you've come out of a nice 4-bedroom, 3-bath, or 5-bedroom, 4-bath home, whatever the square footage may be, and they're trying to put you in a 2-bedroom or 3-bedroom apartment, folks, you have to understand what that means. You might be putting the cart before the horse, and you're setting an unrealistic financial tone with the insurance company as you move forward, because if you are willing to accept housing that is far less than what you were accustomed to, it's going to be difficult to get them to move 6 or 7 or 8 or 9 months or a year down the road when it comes time, and you've that apartment or that small space has run its course, and now you need to get into something bigger, and you've already set a financial tone that is far under what you are entitled to. It's difficult to get them to move because they are accustomed to paying that dollar amount, and you have set a tone with them that you are okay with that dollar amount, and that you're comfortable in the environment in which they put you. So push back, folks, a little bit on your housing. You're not entitled to take what they give you. You are entitled to maintain your normal standard of living, and I can't stress that enough. Maintain your normal standard of living. Now, of course, a lot of that is solely dependent on the fact that there's very little inventory. But if you're interested in what the options are, and folks, there are several options that you can explore, you just need to understand what those are instead of just being given one option by the insurance company. Again, I don't want to go over them on this particular format because each particular carrier is different. They respond differently, and each claim is different. So if you are interested in what housing options are available to you, just for purposes of discussion, so that you can at least weigh the different variables, certainly feel free to reach out, and I'm happy to have those discussions with you as you move forward. What's best for your financial recovery? Well, what's best for your financial recovery is preparing yourself in advance and positioning yourself and controlling that narrative. And I've said it a million times, and I'll say it 1,000,001 times. There's only 2 paths of recovery, folks, for every single client. Doesn't matter what it is. Only 2 paths. Path 1 is the path that everybody is on that doesn't have any particular representation. That is the insurance company's path. And you are communicating with the adjuster. You are following their instructions. You are listening to their guidance. You are making your decisions based off the information given to you by the adjuster and or the insurance company. And however little information you're getting from your carrier, you're expected to make these high dollar, in many cases, 7-figure decisions, but you don't have all the information available to you. I can't stress enough, and I've said it again before, previous webinars, Folks, you've got to request your certified copy. I can't tell you how often every day I'm communicating with families who do not have their certified copy and who are just getting a lot of pushback from the insurance companies, and they don't want to give it to you because the certified copy, folks, is the latest version of your policy. It's the version that has all of your endorsements and your exclusions. It's the latest version of any of the language change that's taken place over the course of the last 12 months. And it's what we call the rule book. And if you don't have that rule book and you don't have the ability to go and look into your endorsements or look into the exclusions, then you really truly don't understand how that contract is expected to respond. And you're taking the information given to you by the out-of-state non-licensed insurance adjuster who represents the insurance company, and you're taking their direction as gospel, and because that's all you have, and we understand that. So again, to level the playing field, you really do want to request and push and get that certified copy of your policy. The second path is the path of advocacy, whether that's through public adjusting, whether that's through an attorney, and our position forces the insurance company, or advocacy positions in general, I'm certainly not promoting public adjusting by any means, but advocacy in general forces the insurance company to react to a very specific position, as opposed to you having to react to the insurance company's position. An example to that would be when the insurance company gives you their response to the valuation that they've placed on your claim, be it personal property or your structure. The follow-up behind that position is going to be, look, if you think you're entitled to more, prove it. Oh, but by the way, we know you don't speak the language, and we know that you don't have your certified copy. We know that you don't understand the Xactimate software system. And no, you can't use a contractor to write an estimate because it's not in the same language. So, but still, you have to prove it to us. Well, that becomes very difficult, right? So how do you position yourself to do so? So anytime you have an advocate, if it makes sense, not everybody needs advocacy. Certainly not everybody needs representation. Some of you, unfortunately, are woefully underinsured, which we're going to talk about a little bit. A lot of you are properly insured, but you're getting advances. So there's a sense of security there that the insurance company is going to take care of you. But it's early in the game. You know, like I said earlier, this is a marathon, folks. This is not a sprint. And so what you are experiencing early on in the claim is not what you can expect to experience, 2 or 3 months from now. It's going to be very different. So prepare yourself accordingly early on in the process so that you can prepare and identify what's to come. So when you have that path of advocacy, whatever that is, the position that's taken forces the insurance company to react to a position, because we, or your advocates, are preparing a defendable valuation that the carrier then has to go through and determine what is or is not accurate. Very difficult for them to dispute that position. So whether that's through your personal property, your dwelling estimate, whatever the case may be, you're forcing them down a path that they are uncomfortable, and it makes them step outside their normal business model, because they want to be the ones controlling the dialogue. They want to be the ones controlling the flow of the monies. They want to be the ones controlling the amount of information that you're given by way of not giving you your certified copy, which for some reason I don't understand why the carriers are not doing that. So keep pushing for that, because it's going to be critical for your recovery. What options are available to me, and how does it benefit you? Well, folks, when you're looking at what is available to you, myself, nobody can quantify for you what is in your best interest. I think anytime you have experts representing whatever the situation may be for you, you're always in a better position, especially if you are not an expert in that subject. But you want to weigh the cost versus the investment. If you look at advocacy groups, attorneys, or public adjusting firms as a whole, as a cost, you're probably never going to get over that expense, because quite frankly, some of these claims are pretty large. And if you're looking at a cost associated with the fees to manage some of these claims. Some of these fees, quite frankly, can be quite large because the claim is quite large. But the question you want to ask yourself is, if you're in the process of considering advocacy or not, is can you get where you need to go on your own without having to have a professional entity in front of you? And if you're attempting to go down that path, what are you potentially leaving on the table? And more importantly, what value are you putting on your time and the quality of life? And I discussed this last week, and I had a lot of comments after our webinar about this. Folks, a lot of people, and on the personal note, not even on the business side anymore, a lot of people do not put the value on what I believe and the rest of my colleagues believe is our most valued commodity, and that is time. It is the one commodity we do not get back. And in these events, they are incredibly time consuming. And it's not just time consuming for the first week or the second week, it is time consuming over the course of potentially 2 years. So when you start looking at how much time you are going to have to allocate in order to protect yourself and make sure that your recovery is what it should be, you have to put a value on that, folks, because if you are giving the amount of time that is required to properly manage a claim, because you're doing it on your own, you're preparing all your own documentation, you're spending all the time to prepare your personal property, excuse me, what are you taking that time away from? Are you taking it away from your career? Are you taking it away from your children? Are you taking it away from your marriage? I can't answer those questions, but you've only got so much time in a day, and you have to allocate a certain amount of time to this in order for it to be successful. So when you look at potential advocacy, whatever that may be, you want to potentially look at it as an investment in your recovery. You're investing in the expertise of whatever the entity is that's going to get you to the finish line in the most efficient, most effective manner possible, and to maximize that recovery so that you can get on with your life, whatever that path looks like, whether that's rebuilding or whether that's buying another property, but just getting on with your life, which then ties right into the quality of life. The quality of life is critical, folks, and depending on where you're at in your life, depending on your age, depending on your health, these are factors that really most people ignore because the getting settled becomes a priority. But now as you start to get settled, now you've got to figure out what you're going to do with the time that's required for you to maintain what is ahead on your claim. The adjuster has probably shown their position to you folks by now. And when I say shown their position, they are telling you or having conversations with you about the estimate. They're telling you that things are now being reviewed, that management is reviewing the final dollar, and that the settlement should be coming soon. This would be in addition to the advance that you may have already received. So just expect that what you are being told may not match what you are going to receive. Understand, folks, that a lot of the adjusters do not have the authority to make financial commitments. That's why their product is being reviewed by upper management. The only thing that they are actually allowed to do is what's already pre-approved by upper management for that particular carrier, which is certain dollar amounts for the advance, i.e. the 30% that a lot of you have received. We have seen 50%, and on some carriers, we've seen 75 to 80%. So hopefully you're one of the lucky ones that you got the larger advance. It's not uncommon that the communication starts to fall off. In fact, it's pretty normal, actually. Everything is kind of moving super fast in the beginning. They're really responsive in the beginning, but just expect, folks, that when you start to see things settle down and it starts to become kind of quiet and you're not really getting any direction, your agent's not communicating with you because they don't have answers for you when it comes to why are you underinsured and why is my policy not paying for this or that? Why am I, $200,000 under what I need to be for the recovery of my home? There's a lot of questions, and unfortunately, they're just using this software system that's given to them. Certainly has nothing to do necessarily with the agent or the brokerage firm. It's just a a flawed system in general that just doesn't allocate a lot of the monies that are really needing to be built into these estimates for increased cost of construction and increased cost of raw goods and petroleum-based products, increased cost of labor, COVID restrictions and costs. I mean, just, supply chain issues, on and on and on. But all of these variables combined create increased dollars. And these dollars have to be spread out throughout the policy somehow. And if the software system that the industry is using to generate what the valuation is on your home is inaccurate, then when you have events like this, then you are not properly insured. So then you have to figure out how to work within the means that you have. How do you maximize every single bucket? And that's what our hope is for you, is that you are paid policy limits across the board. Because like I said earlier, a lot of you are underinsured. I'm going to jump to some of these questions, then I'm going to get to some of the slides that kind of oversee and break down the policy so that you folks understand exactly how the policy responds, because there's quite a few questions that are coming in right now. And the first one is, the insurance company wants to send me checks. How does this impact me moving forward? Well, just because you've accepted a check doesn't mean that you're accepting that as the settlement in its totality. I would say this to you folks: you're always better having the money in your account than them having it in their account, because if it's in their hands or the insurance company's account, at some point, if they choose, they can use that as leverage. And again, I won't go into the strategic positioning and why that's critical on this, because it's far too lengthy, but understand that every single position the insurance company takes, every single discussion that they have, every single question that they ask is for a reason, folks. Make no mistake, there is always something behind that. So you have to know what those reasons are so that you understand how to properly respond. So if they're offering advances, by all means, take the advance, but you have to understand what that means now. Typically, when the insurance company provides an advance, especially against the structure, folks, not so much against the personal property, but when they give you the advance on the personal property, that's it. That's all you're going to get from the insurance company until you perform. When you get an advance against your structure, sometimes there will be a secondary check that may follow behind that once the estimate has been approved or finalized by upper management of that particular carrier. But for the most part, folks, when they give you what they're giving you as an advance, you have to understand what that means. It's not just about getting an advance. Everything is related to time, and your housing is related to these advances as well. You technically have a certain amount of time or a dollar amount that's going to dictate what your additional living expense limits are. And when you are given advances, the insurance company's position is now it's time to perform. We've given you money to start talking to architects and engineers and contractors and getting your lot cleaned up. And they live in a world that's not necessarily reality. And they put unrealistic time frames on things. But nonetheless, it's a contract, folks, and the clock is ticking. So I had a conversation with somebody today that said, I'm not talking to the insurance company, and I don't intend to talk to the insurance company until I decide what I'm going to do. Well, folks, you got to be careful with that, because remember, you're in a contract and there's a very specific language about communicating with the insurance company, cooperating with the insurance company. And I would encourage you to read that language in case, because what you don't want to do is find yourself outside the compliance circle of what your contractual language reads. You want to make sure you always stay in compliance so you don't give the insurance company any reason to deny any claim or any monies moving forward. Should I accept the check? Oh, so next one is, my adjuster said, hold on here. My adjuster said he can't show me the copy of my estimate yet until it's approved. What does that mean? Isn't it my estimate? Yes, absolutely, folks. It is your estimate, but here's the problem. Your adjuster doesn't have the authority to make the decision as to what he's giving you or not giving you. Again, they don't have that kind of power. They are information gatherers. They gather all of the information and they write a nice report, and then they send that up to management, and then management is the one that fine-tunes your estimate. If I had to drill down and really simplify, folks, and I've said it again, in previous meetings that I've had and in previous webinars, your entire financial recovery, entire folks, as it relates to your structure, is solely dependent on that one adjuster's interpretation of your loss and how he translates that physical data that he's taking from you and then translates that into the software. And the dollar that that software is generating is going to be what determines your recovery. Whether it's good interpretation or bad, one person is the go-between between you and that insurance company, and you aren't responsible for that product, folks. So understand, yes, the insurance company is giving you money, but you're giving a lot of power away to somebody who doesn't even live in the state or isn't licensed more than likely. And they're just taking the information and translating that to the software, which we've talked about. And your hope, and I hope that that information is accurate as it translates, because if not, you're going to find out how inaccurate it is when you get the estimate back after it's been fine-tuned by management. So you will get a copy when they give you the settlement offer after it's been reviewed. And then that copy is basically yours to do with as you wish. And then you're going to have to fine-tune that copy to get you to where you need to be, which is over your policy limit and then into your extension if you have an extended replacement cost endorsement, which we'll talk about a little bit later when we go over the slides. Can you talk a little bit about the rebuild process as it relates to developers coming into our neighborhoods? Well, that's a good question, because I've had several conversations, folks, with a lot of folks who have lost homes that are in smaller communities. And there are a lot of discussions about landed costs and developers coming into certain neighborhoods and people banding together and working with a single developer to try to get a lot of the homes built and keep the costs down. Look, I'm just going to give you my personal opinion on this, because I've not been in privy to these conversations. So I feel a little uncomfortable speaking on this, but I will tell you what I feel comfortable with. What I do feel comfortable with is that if there's 15 homes on a block and a developer wants to come in, the things that need to be considered are the following. You may have 15 different insurance companies, folks. And with 15 different insurance companies, that means you have 15 different paths of recovery. You have 15 different lines of communication. You have 15 different insurance companies that are processing payments at different paces. Some are going to have to work much harder to get to policy limits than others. And so, yes, you may have a developer that can come in, but what if your neighbors are much further along in the financial claim settlement process than you are? How is that developer in general going to hold the reconstructive process up for 1 or 2 or 5 different homes? It's going to be very, very difficult. So just understand, you've got a lot of moving parts when these discussions are coming up, and how somebody is going to navigate however many insurance companies there are that are going to be participating for however many homes have been lost. I think that might be problematic personally, because I just don't know, since so many different carriers are responding at different paces and providing different levels of advances. It's going to be very difficult for people to make these types of decisions moving forward, because remember, folks, and I've said it before, you cannot responsibly move into a contract with a developer or a contractor until you have a negotiated budget for your structure in totality. I'm talking your full policy limit, your full extension, the carrier's committed to those dollars to the last penny. When you get them committed to that dollar amount, and you know that that money is sitting in reserve for you, and you've been paid up to the policy limit, and they've committed to paying you your extension, and it's in writing, not the, hey, we'll address it when you start incurring the cost. I'm talking they've agreed to that extension in writing, and you know exactly how much money you have at your disposal. That's when you can, responsibly move forward with a builder or a developer. If someone were to consider representation through an advocate, what is the downside to waiting for the insurance company's offer? What would you recommend? Well, folks, in our world, in our industry, that's a good question. Time is most important in our world, because the earlier that your advocate, whoever that may be, can gain control of the narrative and set the trajectory of your claim and not allow the insurance company to get too entrenched in their position, you're always going to have a better recovery on the back end of your claim if the front end of your claim is positioned strategically. Or if you don't position yourself in the beginning of the claim, it's a little harder to get the train to come back down the track that it's already on and then push it down another track. Is it done? We do it every day. Is it easy? Nothing's easy when it comes to a claim, but is it easier when somebody has control of the process and you are dictating the expected response from the insurance company early on? Does it speed the process up? Absolutely. It speeds the process up because you are taking control of the flow of the information. You're producing the defendable product that the insurance company has to work from. And anytime you can regain control of your claim, you're always in a better position. Waiting for them to take a position, and when numbers make it to paper, it becomes a defendable document. And that means that typically people in management have signed off on it, and they're going to dig their heels in because that's what they feel that they owe. And you really are going to have to prove to them otherwise. So it's a good question. The downside would be you're not spending any money on an advocate to represent you in the beginning. That would be the upside, I guess. The downside would be you're allowing the insurance company to take a very strong strategic position against you that you're going to find yourself having to react to, maybe in another 3 or 4 or 5 weeks from now. This next question is it reasonable to hire a company like yours to examine and properly document before a disaster? Is it reasonable to hire a company like yours to examine and properly document before a disaster? You wouldn't need to hire us before a disaster, folks. So I had a conversation today, as a matter of fact, and she did not lose her home, but she was being proactive in reaching out to figure out, because this event has really prompted some discussions. Am I properly insured? Because the theme across the board is nobody is properly insured. And so we know what the software system typically generates on a per square foot. That's a dangerous term because everybody seems to be basing everything off of a per square foot cost. But if you're not properly insured on a per square foot, based off what the software system, the Xactimate software system, is going to generate for your type of home, then you are definitely going to be underinsured. And our train of thought is that it's always better to have it and not need it than need it and not have it. So even if you paid a little bit more, the dollar that you're paying potentially in your premiums is going to be far less than the delta that you don't have when you need it if there is an event, right? So if you're $100,000 or $200,000 underinsured, that's a big gap, and that's going to end up costing you a lot more in the long run than maybe an increased premium to have your policy adjusted now. So now would be the time, folks. And again, there's 2 paths of obtaining this information. Your agent and your broker is your source for the policy. Again, nothing against agents and brokers. I want to make that really clear. But your agent and the broker are not in the trenches fighting it out with the insurance company day in and day out and understanding how the policy actually responds to the peril that it's covering. So if you are interested in understanding if you're properly insured, it wouldn't hurt for you to reach out to an advocate that deals with the back end of the peril after the event has already taken place and now the policy's kicked in and now we have to get it to perform. Because we're going to look at your loss, even though there is no loss, as if there was a loss, so that you can be positioned appropriately. There's no charge for any of that. We do it every single day. It's just a courtesy because we have knowledge that others don't. So again, you have my email if you're interested in just a 5-minute conversation and taking a look at what your coverages are that you have now based off your square footage, whether it's a custom home or not. I can tell you pretty clearly what you might want to consider having in the event and just being proactive with that. Last question here, it looks like, is there is a resource providing a lot of self-help information and making it seem like we can manage our claims on our own, but I'm finding the communication difficult. What can I expect moving forward from my insurance company? Well, we kind of addressed that a little bit earlier. Look, everybody has different levels of tolerance, and people can fight it out with the insurance company until the very, very end. And, I hope that works for everybody. I truly do. I don't know how a lot of you are going to get where you need to go in order to be made whole, because the amount of work that it requires. We have teams of professionals that are assigned to families, as do I'm sure many attorneys, but it takes a professional in their respective discipline to manage each piece of that claim. So when you're doing it on your own, you're really taking on what an entire team of professionals would typically handle in our industry. So if the self-help information is giving you the encouragement and the empowerment to move forward with your claim, that's great. Again, we're always available for questions. I would imagine you're going to find it more difficult as you move along. It says here, because you're finding the communication difficult, you're going to start to see the insurance companies not responding as quickly as you would hope, and or in the time frame in which you are comfortable with. Remember, folks, the insurance company's timeline is not yours. And you want to move things right now. You want to get things done. I had a conversation with one of our clients yesterday morning, and she is a do-it-yourself or get it done right now. And I had to tell her it's just not the way that the insurance company's timeline works. So it's hard. You have to be patient, and you just need to stay persistent with your pursuit if you intend to manage this. And pay attention to every discussion that you have, folks. Pay attention to every form and document that you're given. And then really understand with what they're paying you and the advance that they give you, what is behind that advance. What is your insurance company's expectation after getting that advance to you? You want to make sure that clarity is key in this industry. You want to make sure that you understand exactly what the insurance company expects and the timeline in which they expect it. So with that, I'm going to jump into just some of the slides just so that we can wrap up this evening. It's really just kind of a general discussion when we get into week 3 typically, because a lot of things are starting to happen. So for those of you who have never joined us, we'll do a quick recap of what these slides are. If you were to take your coverages and break them down into a pie, here are the different slices that would represent your coverages. Your dwelling for your basic limits or stated limit. Your extended limits for those of you who have extended replacement cost, endorsements, your personal property ACV, your personal property replacement cost, which we'll get into a little later, your other or separate structures, which we'll discuss, your code upgrades, your additional living expense or ALE, debris removal, and trees, plants, and shrubs. So those are the coverages that make up everybody's policy moving forward. We're going to discuss coverage A, which is the dwelling. So in this particular example, we're just going to use a base limit of $1 million. Now, when there's an event like this, folks, you have multiple options available to you. Now, again, without going into an hour long just on coverage A, these options are really driven by a couple different factors. Is there a mortgage? Is there not a mortgage? Is the mortgage small enough to pay off? Do you intend to build there? Do you intend to build elsewhere? What are the advantages of rebuilding off-site? How does my policy respond to that? So we're just going to go briefly through that. When you take a look at your dwelling coverage, you have other additional coverages that are part of your coverage A and that are all based off of the dollar amount of coverage A. You have 5% for debris removal in addition to your base limit, whatever your base limit may be. Your trees, plants, and shrubs typically represents 5%. There's some language about what defines a tree, plant, and shrub, how much they're paying per tree, plant, and shrub, and what is the distance from the home that the trees, plant, and shrub has to be in, because a lot of you have some acreage, and if you're, non-manicured land is part of what you've lost, there might be language to exclude that portion of your coverage. Of your land for your trees, plants, and shrubs. So depending on what you do, no matter what, you're entitled to your base limit, whether you rebuild or you purchase a replacement property or you don't rebuild. You're entitled to the 5% for your debris removal, regardless of what you intend to do, rebuild or not rebuild or purchase another property. You're entitled to your 5% without performing for whether you rebuild or purchase or don't rebuild. Where it starts to get tricky and what you potentially are walking away from is your extended replacement cost if you don't rebuild. Again, folks, your extended replacement cost only comes into play. I cannot stress this enough. Only comes into play when your loss is measured above your policy limits. And even if it's measured $50 over the policy limit, you still have to figure out how you're getting the carrier committed to the full extension of what you're entitled to. If you see the policy being measured just up to the, or your estimate being measured just up to your policy limit, and then they back money off for depreciation, you haven't even gotten into your extended replacement cost endorsement that you're entitled to because of the way that your estimate was measured. So again, folks, you've got to pay close attention to how they're generating their number. So in this particular case, if you do not rebuild, you do not have access to your extended replacement costs. They're not obligated. Extended replacement cost comes into play when you perform. Some policies have additional increased coverages for declared catastrophes or disasters. I've only seen one policy so far in probably the almost 400 policies that we've reviewed that actually have this endorsement. It'll increase coverages based off it being a declared catastrophe. And then of course, your code upgrade is directly dependent on the base limit dollar. It's typically a percentage of. In this particular case, we're using 10% as a standard example, which would be 100,000. But again, if you had that declared catastrophe endorsement, it could bump your code upgrade to 100% of what the value was. Coverage B is your other structures. I've heard a lot of horrific examples from the adjusters that are handling some of these claims. I think the one that just was the most ludicrous was they were saying that other structures is 4 walls and a roof. Folks, that's not the case. And if you're being told that, that's absolutely not right. We're going to use these examples here because every one of these is an example of what an other or separate structure consists of. Your coverage B is typically always a percentage of your coverage A. In most cases, it's 10%, but there are some cases where you may have an endorsement that you paid for, which bumps it to 20%. But garages, workshops, detached fencing, retaining walls, which a lot of you have, walkways, driveways, patios, sprinklers, exterior lighting, pools, cabanas, shops I would throw in there as well. Our workshops is already there, but nonetheless, those are all other or separate structures. Now, the majority of the losses that we've looked at, and even the ones that we're currently representing, that particular coverage tends to be underinsured unless you have a separate endorsement to cover a specific part of your property. If you have a beautiful 3-car garage that's a separate shop and a car garage, and you've got a mezzanine level above, you would probably have that separately insured for its own value and not included in your policy. So again, here, the base limit being 100,000. In some cases, extended replacement costs will also increase your coverage B as well as coverage A. You do have debris removal built into this number as well. So in this case would be 5% of your 100,000, and code upgrades also applies to other or separate structures. In most cases, it's 10%. So in total for this particular coverage with this example, it would be 115,000 available to you if you had 100,000 really in coverage B. Coverage C, personal property, the one that we talk about every day over and over and over. It's the most time consuming and the most daunting, but In this case, we're going to say that we're going to use 500,000 as the base limit. Now, folks, you all have sublimits, and you really want to pay attention to these sublimits. I had a discussion with a family this morning, and we went through above and beyond what the standard coverage limit was for coverage C, and all of the sublimits that we went through each line item. And in this particular policy, I think there was like 21 different line items that were listed for sublimits. And just by going through these sublimits and identifying these items specifically, we were able to increase what their overall recoverable dollars were by, I think it was $33,000. So you want to take a look at these sublimits, because you're going to have sublimits for a lot of different smaller items that you would find. Business, personal property, you're going to have sublimits. Watercraft, you're going to have sublimits. Cash, you might have sublimits. Trailers that aren't enclosed, you may have a sublimit for. There's a lot of different subjects, so you want to take a look at all those sublimits and then add them up accordingly, because they may add additional monies to your overall recovery. Scheduled items, again, folks, we've talked about this. If you have very high dollar items, I had this discussion today. If you have extremely valuable antiques or artwork, or if you had a piano, and it represents a large portion of what your overall recovery dollar is for your personal property, you would probably want to insure those line items individually. And if you have that, great, then you're covered. If you haven't lost a home and you're being proactive, take a look at what your policy states, kind of do a once around and look and see if you have some pretty expensive items that might represent a large portion of that dollar. That's not what you want, folks. You want to kind of separate your higher dollar items. If they're starting to get into the $50,000 or $100,000 range, you may want to insure those independent. Actual cash value versus replacement cost. Basically, replacement cost minus depreciation equals actual cash value. You're going to hear the term actual cash value come up a lot, folks. It's going to be what the insurance company is going to pay you as their initial payment. It's called the actual cash value. We'll jump into the next slide and I'll explain what that means a little bit more. I'm going to just kind of float through these things real quick. Do you need to list every item? Folks, if you want to maximize your recovery, it is in your best interest to max out every line item that you possibly can. Take your time. Do not rush this process, because you've got time to get it done. Take your time. You don't know how much money you're leaving on the table if you're trying to rush and get this done, because the emotional side of this is driving you to want to get this done, but at what cost? If you're leaving $100,000 or $200,000 because you're not getting where you need to be, and you're allowing the insurance company to hit you hard with depreciation, it's not worth it, folks. Take your time. You've got to take your time. Slow it down. Just pause for a little bit and regroup and understand, and apply a little bit of time each night so that you're not overdoing it and burning yourself out. So for those of you who have replacement cost policies, here's how that works. There's a misunderstanding, and I still am having conversations with people about this misunderstanding. If you have replacement cost, here's what that means. If you bought a couch and that couch was $1,000, the insurance company is depreciating that couch by 50%. They're going to give you $500 towards that couch. And when you give them the receipt that you spent $1,000, they will give you back that other $500 in recoverable depreciation. That is if you have a replacement cost policy. And we're going to use this example quickly. If you had women's jeans by Riders, vintage, quantity of 1 in today's replacement value, because remember, folks, it's not what you paid for an item, it's what it takes to replace that item today. So the reason that your personal property takes so long is because you've got to find the pricing for all of your items and set that expectation with the insurance company as to what it's going to take for you to replace the items that you've lost. You want to dictate to them what it's going to take, not them dictate to you. So in this case, it's $100 to replace 1 pair of jeans. The source is Macy's, so that you're giving them all the information. You're not leaving anything up to interpretation. They applied 50% depreciation, and the actual cash value, which is the dollar amount that they owe you before you replace the item, is $50, and the depreciation that is withheld is $50. Folks, the position that you want to put yourself in, and we're going to blow past this because we can talk for hours on personal property. whatever your limit is on your personal property, as you're putting together your personal property inventory, you want to add an additional, typically I say 37, 40%, but I'm saying now as much as 50% based on what we're seeing above that dollar limit. So if you have 500,000 as a limit, you want to try to get to 750,000 in replacement value. And here's why. You do not want to get into the receipt game with the insurance company. It is going to take years of your life to try to recoup all of the items that you are allowing the insurance company to hold back depreciation on. And if you don't replace that item, who keeps the money? Insurance company keeps the money. So in order for you to maximize your recovery, it is critical, folks, that you get yourself on the path and you put the product together to get you beyond your policy limit, at least 40 to 50%, taking into account the average depreciation the insurance company is going to apply, so that you are strategically positioning yourself for the best financial outcome. And that takes time, a lot of time, because if you figure you may have from 1,500, 2,000 to 6, 7, 8, 9,000 line items, it takes time, folks. And that's why, even with a team of professionals and each part of that being handled by a different person, it still takes 4 to 6, 7 months to get it done. It's not uncommon for most people to take a year to get that done on their own. Inventory tips and tools. Again, we've discussed this before. We're going to do it again quickly. Keep a pad and pen by you at all times. It's good to have something there that you can just write something down real quick if a memory comes to you. Draw each room out one by one. Visualize the drawers and bureaus and closets, including the shelf in the closet that you never go to, or what's under the bed. Use family and friends to help you research your product. Give them blocks of items, have them send pictures to you. The photograph documentation is huge, folks. Open up a drop box is what we encourage. Maybe start a Google Doc that people can add things to as they're pricing out your personal property. The Google Docs is critical because people can just dump your pictures in, and in those pictures from Christmas and Easter and Thanksgiving and birthdays and whatever else that you may have celebrated, all your personal property is in the background. But also, if you're challenging your adjuster in their position, and that estimate isn't accurate based off what your finishes were, you can go back to your pictures potentially and show that marble or granite countertop, show the 6-inch crown molding or 10-inch crown molding, whatever you may have had, and make sure that the numbers are accurate, because you need to go through each one of those line items and correct it if it's incorrect. ALE versus fair rental value. Again, a subject right now that I've been addressing a lot each day. Additional living expenses is anything and everything related to your expenses for your living condition right now. Your temporary housing, your furniture rental costs, your increased mileage if you're traveling to and from. We can also include gas in that, increased gas. Your RV boat storage, if you were able to store on your property, and now the structure that once housed those items is no longer, and now you're having to pay to have your items stored. Certainly a discussion to have with your insurance company. You're entitled to be reimbursed. Same thing with animal boarding. Again, folks, as a pet lover and an owner, it would be difficult for me not to have my pet with me, but in a circumstance like this, it's understandable. And if somebody else is temporarily taking care of your animals, they should be reimbursed for that because the policy pays for it. And your additional living expense is either going to be driven by a dollar amount or an amount of time. All of them are driven by time. It's just a matter of how much, whether it's 12 months or 24 months. So even if you have a dollar amount in your coverage, it's still going to be specific to time. You would just take the dollar amount and amortize that out over however many months your policy says you have. There's a lot of discussions right now about what the department's going to do about increasing the additional living expense timeline from 12 to 24. But until we see that, I don't like to talk on things that I don't see happening just yet, so it doesn't affect our clients. And I would say just hang tight until you see some changes made. So at the worst case scenario, just go off the language that you have in that contract and go off that timeline and make your decisions based off that. Fair rental value is another form of reimbursement and housing that pays you what your home's value was at the time of the loss to rent. If you had a 5,000 square foot home, and if you were to rent that home furnished just prior to the fire, and it was $7,000, $8,000, $9,000, whatever the case may be, if you have the appropriate comps that position you financially, and you have a fair rental value policy, and housing is really becoming difficult, and you may want to explore other options instead of being locked into a temporary housing situation. Maybe you want the flexibility of trying to find housing on your own. You can negotiate that dollar amount with the insurance company, have them pay you monthly, and then you are able to find your own housing for whatever that housing may cost. Now, understand that the insurance companies might request documentation to support the dollar amount that you're being paid. They have every right to. They might come back in 6 months and say, hey, show us what you've spent the first 6 months of money on, so that they can see what lease you're in. Example of that would be if you are getting $9,000 a month, you're only spending $5,000 a month, and they feel that they have been overpaying you by $4,000, they will not issue you any more monies until what they believe they've paid you has been consumed based off what you're paying per month. So keep in mind that could come back and get you. The carrier does owe for increased costs due to limited housing, folks. The pool of homes is small, and the cost is through the roof. And so if your home would have rented for $4,000, but the only thing available that meets your needs, which is equivalent to what you had, is now $6,000, the insurance company is obligated to do so. The only thing I would encourage you to do is make sure that you're not putting yourself in a financial position to consume your monies, if there's a dollar limit in that coverage, too soon. Try to amortize that money out and spread it out over 24 months if you can. So if you cut that time short, you may find yourself in a pretty bad situation if you're having to pay for temporary housing and pay for your mortgage as well. You don't want to run out of time. Who can represent you? We kind of discussed that earlier. Attorneys certainly can represent you. There's quite a few that we know. We've had many discussions with in this event that are representing several of you. They take a very different path than we do. They tend to take a little bit more of a reactive role, waiting for the insurance company to come up with a position and then trying to negotiate from there. Public adjusters like myself and our firm, and we take a very different approach. We take a very proactive approach and force the insurance company down a path that they don't typically want to go down. Because we're preparing and presenting and negotiating the claim, but we're doing so through defendable data that supports that valuation for what the client is owed. Contractors, folks, be careful. Don't get wrapped up into the contractor scheme of things, that when the contractor's telling you they can negotiate with the insurance company, that's not the case. It's a very self-serving position. You certainly don't want the person that's trying to spend your money communicating with the insurance company so that they know exactly how much you're getting. That's probably not the best position to leverage if you're trying to negotiate your reconstructive costs. And of course, your insurance agents and brokers, we've discussed it. They're licensed to sell you the product. They are not licensed to negotiate the product. We are licensed by the same entity. We have the same continuing education courses. We have the same regulatory guidelines. It's just that our license is specific to negotiating and maximizing recoveries. The insurance agents and brokers are licensed to sell you the product for your home or business. If there's any questions that you folks have, if you want any forensic policy reviews, we certainly do that. There is no obligation, folks. You've got to understand where you're at with your policy in order for you to make educated decisions instead of emotional ones right now. I cannot stress enough, please get your certified copy of the policy. You just can't really position yourself until you understand how the language is going to respond. We're available as a resource, folks. Just because we represent clients doesn't mean we don't take many hours during the day and answer a ton of questions and just talk about your situation, understand where you're at, give you a little bit more feedback as to what you need to do moving forward, because everybody's in a different position right now. And so the more you know, the more power you have. But really, the only way you're going to know is by dealing with the people who deal with claims every single day, because we understand how to navigate that language. So again, I thank you all for joining. We're totally available to anybody and everybody that has questions. If you'd like a copy of this for playback, certainly just reach out to us. We'll be happy to send you a copy. And I wish you all well and a speedy recovery, and thank you for joining. We'll see you next week.